Joining me right now is Kace Capital Advisors Managing Partner Kenny Polcari. Also joining the conversation all morning long this morning is Fox Business's Dagan McDowell and Polster and the president of Maslansky & Partners, Lee Carter. Great to see everybody this morning. Thank you so much for being here. Kenny, great to have you. Let me get your take on the Afghanistan news and whether or not that is impacting the investor class. What's happening in terms of its impact on markets? Do you connect the dots at all?
I do connect the dots. Now, look, we know that political situations don't necessarily price stocks in the long term, but they absolutely have the ability to create some disruption and angst and nervousness in the short term. And I absolutely think that's kind of what's happening with the Taliban. I think what happened yesterday in the markets is a combination of issues, but that's absolutely part of the story. It's not all just about the Delta variant.
Well, I guess one element of all of this, Kenny, is whether or not this represents a stop or a halt or some trouble for the Biden economic agenda. We know that President Biden wants this massive spending deal to go through. That will include $5 trillion in spending, as well as much higher taxes, such as a capital gains tax of 43.4%. If this situation, if in Afghanistan worsens, will this create a problem for Biden to get through his economic agenda? Are you hearing any of that out there from clients?
I'm hearing chatter about that. People are concerned about it. But look, that people are concerned about that infrastructure, that $3.5 trillion plan anyway, before the Taliban, right? It was running into some resistance. I think this Afghanistan issue and kind of all the angst surrounding it is going to make that an additional problem for his policy. But ultimately, I think the policy was kind of doomed to begin with. I don't think they're going to get that 3.5 because I think there's a lot of division within the Democratic Party, and certainly the Republicans aren't going to support it as it is. So I think certainly that the Afghanistan issue doesn't help it.
All right, Kenny, we got our eyes on the Federal Reserve later today. They will release the minutes from the July meeting. What are you expecting? Fed Chief Jay Powell yesterday said that there's no returning to a pre-pandemic economy and that the central bank must adapt to it. Powell said that, some things will not change. We will live the way we have been living. Powell also noted the economic impact of the Delta variant surge is unclear. Your take on what we'll hear from the Federal Reserve later today, and will that have an impact on stocks?
So listen, I think he's right that we're all going to have to learn to live with this, with some variant of COVID, right? Because I don't think it's going away anytime soon. But I think that the Fed, nailed it on Monday. They headed it off at the pass. I think what the minutes are going to show is exactly that division amongst the paparazzi on the committee about people pushing more towards it's time to take your foot off the gas pedal. And I think the Monday morning surprise announcement where they're they're close to weighing the tapering and when they're going to begin, it's going to start in November, it's going to end by mid-July. I think they get out in front of what the minutes are going to show today, because I think they wanted to try to control the narrative, control the reaction. And if they didn't get out in front of it, then today when that came out, it would have created more of a reaction. So I don't think we're going to find out anything new. I think what we're going to hear is exactly what they told us on Monday, that the bulk of the group, the majority of the group, is beginning to think we need to take our foot off the gas. Now, exactly when, right? We know that Rosengren wants it to start next month. We know while a bunch of them wanted to start in November and December. I think it's going to be November, December. I don't think it's going to be in the middle of what is also a seasonally weak period of time. As you know, September and October can cause volatility in the markets anyway. And so to add the beginning of the taper during that time, I don't think is the smartest decision. So I don't think we're going to learn anything new today, and I think it's already out there.
Kenny, real quick, where are you seeing interest? Where is the interest in terms of specific stocks or trends in terms of industry? We're focused, of course, on retail. Lowe's out with earnings that are better than expected. It's actually lifting its guidance. And the same-store sales, while down, were not as bad as the estimates on the comp store sales. So what's your take on retail, and where else, if not retail, are you seeing interest from investors?
Right. So they punished that stock yesterday when they punished Home Depot. So that today we're getting a little bounce out of that makes some sense, right? Because they already reacted to that yesterday ahead of even the earnings. Although in terms of where we're going towards the end of the year, I'm in the value camp, right, versus the growth camp, because I do think there's going to be a correction. I do think that the Fed policy is going to change the narrative. And so therefore, I'm looking at financials. I am looking at consumer staples. While they're not sexy and they're not high growth, the fact is they do offer stability. They're big Americana stocks. They do offer offer, they're high dividend payers. And so in a nervous, anxious environment, it makes sense, right, that money would flow there. I would look at healthcare. I would also look at financial.
All right. We will leave it there. Financial, certainly. We're trying to rally back for a little while, and with these interest rates where they are, it's just incredible to see what's happening there. We'll watch to see if we get any movement on the 10-year, but once again, we're pretty rock bottom. Kenny, it's good to see you this morning. Thanks very much for weighing in. We'll see you soon.
Too.